What's up, guys? It's Rey-Jay back with another video. And this one I want to talk about what I think is going to pan out for SPY and the QQQ and give you guys my predictions for the next couple of months. Why I still believe the market has more downside potential for the end of October, even if we do see new all-time highs next week. But just note that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out my Webull link. If you deposit any amount of money, you're guaranteed 12 free stocks. Deposit $500 and you're guaranteed 20. Deposit $25,000 more and you're guaranteed 75. The offer ends very soon, in just about 3.5 weeks from now. Anyways, now let's talk about the market. So looking at the market, I still have the same views as before about why I see these cycles that do dictate the way we move, and they may lead to more downside at least as time goes on. I believe that cyclicals are still going to kick in, and I think the market is setting itself up for a bigger move to the downside, but we're not ready to start that downside move yet. I think the market's going to take some time to really get there. So I'll talk more about this in just a couple of minutes. Why did the market rally? We had this news about the port strikes ending because of the fact that two sides have extended their existing contracts through January 15th, and they need some time to negotiate a new contract, so they have more time now to do that. So the strikes have ended across the East and Gulf coasts, and that has led to the market starting to rally. This was very positive for companies like Walmart and Amazon and many retail out there. It's also good for the American consumer. Then we also got the unemployment numbers. They were pretty good. The market liked the fact that unemployment was below expectations. Not saying the data is 100% accurate. I'm just talking about what's being reported. And the market liked that. So that's why the market saw this nice little rally. So what do I see from here as we're trying to approach all-time highs? I believe the market is setting itself up for a big dump for October, which tends to happen historically. We have an election appearing. What tends to happen approaching these election years is in October, we do tend to sell off. And this does tend to happen historically. There have been years when the market was close to all-time highs, even in September, getting close to this October period. And then we do start to sell off as we get closer to October historically before we start an end of the year rally. There were some instances where we even dumped in October, rebounded a bit in November, and started to dip a little bit more before we continued that rally. So I still hold the same view, guys. My view has not changed about the markets, because what happened was the puts and call option ratio was going up because we started to see a lot more shorts piling in. People thought the market was about to crash. They're squeezing shorts again, it just temporarily. But once again, do not expect the move to last. This is just another opportunity. So the first thing is we have a rising wedge on SPY. I think that we're forming a rising wedge like this. We draw this out very, very nicely, kind of like this. You can see how it's very, very vertical. And this doesn't extend that far. We could extend it just like this, depending on how low this goes. And then when you draw it out like this, you could see how this, it's looking very vertical right now. From the way I see things, I don't expect us to go way higher than where we currently are. I think that this is just a manipulation move, but I still think that we're going to be looking for a shift in our cycle. The first catalyst is going to be CPI. We could still try to pump approaching that CPI event, but I believe we will eventually lose this trend line right here, and we are going to be looking for that downwards move approaching the end of October. I think the cycles will still kick in. So I believe what's going to happen is during this period right here, the market has remained bullish. So right here, we're still in this really nice phase where the market is continuing to hold up very nicely. This is still technically bullish. Let me just change this for 1 second. Give me 1 second, guys. We're still holding it very nicely. We're doing a good job thus far. And what I think is going to likely pan out is with this cycle, we will attempt to continue this until we approach some very, very key areas, at least for the markets moving forward, before we enter our next cycle. So I think that in the middle between these two bullish periods, there's going to be a period of high volatility, a lot of risk. And my gut is telling me there's going to be a lot of geopolitical tensions when we get very close to the election. So that's going to cause this new phase. So here's how it's going to go. Okay. I'm going to make this seem very, very simple for everyone. What's going to happen is this: most likely, the market could rally more just to fool people. But this is just Wall Street getting very, very good deals on those shorts. That's all that's happening right now. This is an artificial rally. They're trying to turn you into a perma bull, and we could attempt to approach all-time highs, maybe even try to break them. They could even try to break those all-time highs, but I don't think it's going to last that long. This could go into the first week of October, and then once we are ready, there's going to be some big catalyst that comes out. We have this gap down here to fill at the 535 area. We also have these very, very key levels to watch for. So approaching the end of October, there's going to be a very sharp decline. And I think that that's when we're in this bearish phase. And this will continue to decline all the way down to these lows. I will calculate the lows in just a minute. And we're going to continue to remain bearish, remain bearish approaching the election. Either the election or a few weeks after the election, this market will bottom. And then once we've bottomed, we're going to start this to see this nice rally for the end of the year back up towards these all-time highs. Now, how low could we go? That depends on many different factors. I could actually draw this out for you. So it really depends. I mean, we saw this big little corrective phase that happened, depending on how you would want to look at things from this low here all the way back up. It depends on how high we go. Do we go all the way up to about the 580 area or not? And one thing worth mentioning is that our 0.786 retracement area is at 526. The 0.618 is a little bit below that, or a little bit above that, excuse me, at 537. So I think that range is going to be very, very critical for the way that this ends up moving. If we start from this low down here, it's also very interesting. We have another confluence right here. The 525 area also lands at the 0.618. So I think we could be approaching the 530 area, as crazy as that may sound, for the election period, or as we get very close to the election, there could be a big corrective phase. We haven't really lost our critical support to get there, but I think there's a good chance we approach at least the 530s. So how is this going to go? I'm not going to keep the fib level up, but I just want to show you that we're going to try to rally for the first week of October for another week or so. We could be looking for 580. If they try to extend this into mid-October, it could technically try to hold up. I think 575 to 580 is where we're going to be looking for our top. That's based off the previous all-time highs in our resistance indicators. And then what's going to happen is we're going to enter this bearish cycle phase. This will turn us bearish approaching the election. And what's going to happen is the market's going to form a bottom either approaching the election. If it's a very sharp decline because of some bad news that comes out, this could be, where we end up bottoming in the 530s area, because we could drop really fast, right? For example, if you look at the month of July, from July 16th to about August 5th, in about 3 weeks, we went from 560 all the way down to about 510. We dropped 50 points, almost 10% in just a couple of weeks. So in just a few weeks, this thing could go from 580 all the way down to 530. There's no doubt about that. Could it be a very, very fast decline before we enter a bullish phase? Or is it going to be something else that's very different? It's also possible that we attempt to remain bullish temporarily. If they extend the bullish rally for a little bit longer, it could delay. So the bearish move may not happen until closer to the end of October, and it may be a slower decline like this until we get a sharp decline after the election. We could find our bottom by mid-November and then get a slow recovery to the squeeze at the end of the year. But my view remains exactly the same, guys. I think that what's going to happen is approaching the election, we're going to turn bearish. There's going to be a downwards move coming to the markets. I think that's almost inevitable. And I think this gap down here is going to be our hint. We're going to at least come down to where this gap is in the 534 area. If they pump SPY to the 580s, or at least 575 to 580, that's a golden opportunity to enter those short positions, because that's when we're going to be coming down to this gap fill. That's when we're going to be looking for that entry opportunity for shorts. I believe the short move is going to last until approaching the election, maybe a little bit after, maybe like 1 to 2 weeks after. And then when we finally dump, however long it takes, the market's going to be looking for a massive squeeze starting by mid-November, if not by December. And then that's going to take us once again back to the highs by early next year. So that's what my view of the market remains as. They may hold it up a little bit longer as manipulation, but it's going to be fine. I'm not really too phased by this. For the QQQ, it's the same thing essentially. My view has not changed. I think that we also have a rising wedge-like structure that kind of looks like this that has been developing, and this could continue to hold up and even rally for another week or so. Let them do it. It's completely fine. But that does not phase me in what's about to come approaching this election. So the QQQ could attempt to rally like this, approaching CPI, rally, get very, very tight, and then we could be looking for that bearish phase. Maybe starting in mid October, that's when this could start, correcting. Maybe at the end of next week, right? But we'll be looking for that correction phase to start, and we're going to likely find our bottom by the election time. This is when the market will find its bottom, however low it goes, before we see another attempt to recover going into December, and then we finish the year on a very, very strong end to form a cup and handle. So this is what we could be after on the QQQ. Now, how low could we go? Just like SPY, it could be all the way down to these lower levels. So we'll be watching this very, very carefully. If you look at our fib level, the 0.618 retracement happens to be around 454. Could go there or all the way down to the 440s, which is a bit of a stretch. I know we have this big gap down here. There's a massive gap to fill down here at 426. Are we going to see a massive dump like that on the QQQ? Are we going to drop over 10%? We'll have to see about that. I'm not as sure. We actually, I think we filled that gap. Sorry about that. I think I missed this right here. We did fill that gap, but we do have other gaps down there to fill. So I still, excuse me, I still think it's very possible we come down to about at least the 450 area on the QQQ. There could be a 10% plus corrective phase from 500 taking us all the way down to the 450 area or below. And then we'll be watching to see a nice recovery move. My view is the same. It's either going to dump, okay, approaching the election, or it could bottom a little bit after the election. Our bottom could be even like a little bit delayed. We could even bottom during like this move right over here, all the way down a couple of weeks after November before the bullish rally starts. But nonetheless, guys, my view stays exactly the same. I still believe there's going to be a corrective phase approaching the end of October, if not by November, and then there's going to be a big run. If I were to short this, just hypothetically, if the market does hit new all-time highs, if SPY starts running, the S&P 500 is bullish, you could short with December puts. Not financial advice, but if you take December puts, those could print very nicely because it buys you a lot of time. If you have the money and the funds to do that, it could pay off very nicely. You close them once you see at least at least 5 to 7% drop, and then when the market's at a good, nice low, by the time it's like November, January calls, February calls could print very nicely as well. So, not financial advice, guys. I'm not trying to tell you what to do. I'm just hypothetically speaking about some strategies that I could be taking. I also want to call out that there's this big gap to fill on ES all the way down here. I believe there was another one. I think there's one like all the way down here as well. So not all the gaps have to get filled, but a lot of them will likely get filled. So there's a gap down here at the low 5,000 area. We might not go that low, but there's also one over here around the 5,600s, which I believe we will fill at the very least, which will take us down quite a bit. So I am very confident this is going to come down soon. We'll see what the catalyst is. It doesn't have to be just the election. It could just be politics. It could be involving wars. It could be involving what's going on in the Middle East. It could be involving China and Taiwan. Whatever it is, approaching the election, something is brewing. And they're going to use that as the great excuse to cause this market to dump. So that's what my view of the market is. I believe we're going to be looking for the next cycle phase down, taking us down to the 530s on SPY by the end of October, if not by early sometime in November. And then once that move comes, we're looking for a nice buying opportunity for a nice end of the year short squeeze to rally us back up to all-time highs. Could the market correct again because of the recession? It sure can, but we will see what the catalyst happens to be. But this is still what my general view of the market is. If they try to hold us at all-time highs for the next week, for a week or two, it's fine. We could still do that, but I still believe that the corrective phase is coming, so be very patient and we'll see how things go. With that being said, I thank you for listening. Have a great day, guys. I'll see you guys very soon for another update tomorrow. Until then, thank you, enjoy the weekend, and peace out.